Good afternoon, everyone, and welcome to Stock Market Today. It's Coram here, and today is Friday, December 13th. I'm joined by my colleague, Mike Webster, and we've got a breakdown of the action in today's session and a look at how the week unfolded. And even though it's Friday the 13th, we're not spooked, but the market sure was tricky this week, Webby.
Wow, it was like Friday the 13th all week, right? It was hard. We're in a bull market. We're in a raging bull market, but it's doing what raging bulls do. It's a bucking bronco, and so it does make it hard. But I think today will be a lot of fun to go over, you know, how tricky it's been and kind of where to position yourself.
Exactly. Yeah, I can't wait. So we've got a lot to get to. We'll talk about the indexes. We'll get thoughts on ETF action, looking at sectors, where that rotation was. Of course, we've got some individual stock analysis for you too. And then we've got Webby's charts. It is Friday. We're going to talk about regression channels, retracements, you name it.
All
We've
that
got it
mumbo
for you.
jumbo. Why don't we just keep it simpler?
It's okay. We like getting in the weeds. It's what we live
That's where
for.
I live, is
You're
deep in
you
the
know,
weeds, down by the
it's
river.
it's so funny because you're a keep it simple guy, but you're also a more is more kind of
Yeah,
guy
more is
sometimes.
more when it's needed.
Like with the ETFs for today, you guys. So we have a lot that we want to talk about. So like, okay, Webby, let's try to cut some. So he does, very proud. Then we added the same amount back,
Oh,
just different
we didn't
tickers.
add. I
We.
had.
So, anyway, we've got a lot to get to. So, let's get right to it. First, with a look at those major indexes, the Nasdaq today up 0.1%, so a little resistance there at a round number. Meanwhile, the S&P 500 was flat on the day. The Dow down about 0.2%, and small caps getting hit the hardest today, down about 0.7% after losing the 21-day line in Thursday's session. Webby, let's get your thoughts, high level thoughts first with the NASDAQ this week.
Sure. So, just a reminder, in July, the Nasdaq kind of shifted from being the leadership to SPY and basically almost anything else. It was, but primarily SPY was then leading while Nasdaq and the Qs were taking a much needed break. And that's what you want to see with stocks or sectors. They lead for a while, then they pause and digest those gains, kind of sets up a base or a coiled spring, as some people like to call it, and then they expand. And at the same time, the other ones that had been running up, they need to pause and contract. And that's what we've been seeing, over the last month or so, was SPY coming, SPY kind of slowing down, and Nasdaq. Let's pull up the Qs and see if the RS line on that, you know,
Yeah.
yeah, they're about the same with Nasdaq for obvious reasons, but very strong there. So that's its performance versus SPY. So you can just see how much stronger that's been. And then, I know we're going to go to this later, but go to RSP, which
Mm.
is the equal weight version of SPY, and you can just see how that's your normal stock. So that's what, when people talk about breadth, everyone has their favorite breadth measurement. I like to keep it simple by just looking at SPY, but equally weighted. So, Apple doesn't weigh, isn't weighed more than the smallest one in there. Everything's the same. And with this, it found support at the 50-day so far, and it's still above our marked low, which is very important, the 179.65, because we want to keep higher lows in there. But this is telling you your average stock has been suffering for the last few weeks, and I'm sure people
Mhm.
have felt that with their accounts. You've got some heat really working, some of the mega caps working, but your average stock has been lagging for 2 3
Mhm.
weeks.
Right. And to make things even tougher, we did get a brief burst here with reversal right at the 21 day.
Hmm.
So now it's like, oh, well, just kidding. We lost the 21 day, we lost the 50-day. We've retraced a lot of that. And now we're really underperforming. So, we love looking at the technicals of the bars, but also that RS line can be really helpful.
Yeah, so in general, just the mechanics of the RSP being equal weight, it tends to, and the bias tending to be to the mega caps, um, that RS line in general lags, but this was severely lagging over the last
Mhm.
few weeks. And as you pointed out, losing the 21 day was very disappointing. I was trying it around there, thinking it was going to find support and move
Mhm.
up. That would have been normal and natural. But now we've had, a week of abnormally weak action. So this is, you know, in a bull market, everything is not going to be perfect. If
Yeah.
they don't want to make it easy for us. And as I was saying on IBD Live this morning, seeing the risk that is back in the market, or let's pull up the FFTY,
Right.
which is based on the IBD 50, which so it's a good proxy for kind of high growth names, the style that we like to trade. And what was that down 4 or 5%
Yeah.
that one day?
Yeah. 4.2% or so to kick off the week. So yeah, Monday and Tuesday were really rough for a lot of growth traders.
Yeah, and so that if you were hit really hard on Monday, you probably weren't doing anything wrong. It was just they were selling off our stocks, um, where at the same time Nasdaq and SPY were just it was just marginal moves there. So it was telling you this was our day to get really slammed, and that is going to it's not going to be the first time, it's not going to be the last time. It's going to happen over and over again. And so you just want to, as we go through the show, we'll kind of be, talking about how when you get that first initial hit, you tend to come down 3 days on average. Like, bad day the first day, bad day the second day. And then on the third days
Mhm.
tends to be in general, doesn't always happen this way, where you get your move back up. Let's go to the cues to kind of show that. Um, so it's kind of interesting and point out the first down day that we had on there because it looks so different than FF2Y.
Right. Oop,
So,
let me get my track price back. Yeah. So
so
different.
that was your day. It just doesn't look that bad down 0.78. So that was day one. And then you got your day two. Now, your day three, that normally has kind of a weak open that then goes back up. That's kind of your cookie cutter,
Mm.
mid bull run correction. Third, on your third day, you get your support. The third day we gapped up. God, it's been such a long week. I'm traveling right now, obviously in a hotel.
That was
That
a huge day.
I don't remember what the news was on that day. Do you?
Wednesday was the CPI, I
Okay.
think.
Okay. The
Yeah.
CPI day. So that kind of, the news can shift what normal is around. And so instead of having a weak morning and then going so strong, because the CPI comes out an hour before the open, then we just, moved up nicely. So that was kind of your normal 3 day type of action. Let's go back to FFTY for a second. That just didn't hasn't recovered the way we would like
Right.
it to recover, but at least it's getting support at your 21 day. Um, so we're always looking for what's abnormal. So far, on balance, this is just the normal frustration of a grind higher with a bull.
Yeah. And now we're going to take a look at some ETFs. Webby, do you want these sorted by what was down the
But
most
the
today?
worst first, yeah.
Okay. Just, yeah, give us the bad news first.
Yes.
All right. So we will go there, opening my market surge charts now. So, worst today, GDX, the gold miners.
Yeah, so this is one of the ones we added in at the last minute when we were trying to simplify things. And it was really to just point out how hard things are. And if you're frustrated out there, you look at something like this and just go, okay, there are a lot of reasons why someone could rationalize, gold working and the miners working. But now you're in this thing where it broke down kind of head and shoulders top looking where you ran up underneath your 50-day, ran into resistance. And now that's kind of a classic short. So I wouldn't be surprised to see this, try to break the 200-day. So just a reminder that really follow the charts, even if you like the story. Make sure you're paying attention to what the charts are actually doing. Broke the 21 day, months ago. Broke the 50-day. when you're in a position like that, you want to stay away from that general area.
Absolutely. Okay, next, metals and mining. So similar here, and just
Yeah.
look at the way that this relative strength line has fallen off. And I think a big shift this week because last week, hey, testing support at the 10-week line, but then you have a follow up on the weakness this week. So that is not what we want to be seeing in a group that's going to continue to lead. So this definitely a character change. It feels like here.
Yep.
Okay, next on the list, K-Web China. This was another head fake this week.
Yeah, so I wanted to put that in there for that very reason that we've had several head fakes with this one since it started going. I think it'll still go, but as we were talking about on IBD Live, when it, each time it ran up, it's like, yeah, it could go a lot higher from here, but can you make money in it?
Mm,
And it's very difficult because of this choppiness of you never know what the news is going to be or when that news is going to hit, and then when it happens tends to be an overreaction. And yeah, so just wanted to put this one in there as just a reminder that it's a tricky market.
yeah, I mean, up 10% on Monday, down almost 5% the next day. So very, very whippy. But, we did talk about those risks on the show for sure.
Yep.
Okay, here's XLC. This is communication services, healthy relative strength line to me.
Yeah, so this is where we've got, Google and Meta, which, we've got on Swing Trader, and I've got a position in it. And even though this was down a lot today, down over 1%, I still think that those kind of dominate this area. And I still think that they look fine. So I would look through the rest of the ones in the group for anything else that's kind of set up.
Mhm. Okay, here's XBI, the biotechs. What a topsy turvy group this has been.
Yeah, and we added this one, back to the list for that very reason. I just wanted, because if people have been having a hard time, and I'm saying it's a runaway bull market because I
Yeah.
I believe that um, there's a reason to be frustrated and a reason to really, be screening every day and on top of things because things move so quickly and the rotations are so violent, that this I think this is picture perfect of showing how hard it is. A breakout failure came back up, was tightening up, and looked like it was going to go back up to new highs, and then it failed.
Great signal.
Um, so very, very hard.
Yeah. Okay, here's XLB, the materials. This looks bad too.
Yep, kind of like the other ones.
XLE. This was an area where we thought, hey, momentum after the election, and it did temporarily, but now we've reversed course. We've more than filled the gap as of this week.
Yeah, but interesting enough, I'm finding a lot of oil stocks that don't look anything like this making it through my screens. Some big giant cups. I just can't think of them off the top of my head. So I still would um, play through
Yeah.
this list, but I'm not trading any of them because they're so difficult. They look really good for 2 days, then they fall apart. But some people like to have that diversification. But in general, the XLE looks
Yeah.
terrible.
And what we do know is that this is dominated weightings wise by Exxon and Chevron. So,
Exactly. Like
yeah,
40%, I think, of
yeah,
XLE. Yeah.
yeah, big
But XOP
portion.
doesn't look good either. And
Mm,
that's more
yeah.
broad based. Here I go, like adding more
There,
ETFs.
there you go. We'll get back on track here. XLRE real estate waning relative strength.
Yeah, that RS line has been bad since September, but there were a few in there that looked okay, and they kind of can balance out your account. So I wouldn't totally shy away from it, but it would be, if anything, maybe 5% of your account.
Mhm. Yeah, and be selective with those leaders.
Yeah,
Okay, RSP, we'll talk more about that later.
yeah.
Here's XLI, the industrials, pulling back around the 50-day line. That's an area where it had gotten support roughly before, but you couple this pullback with a continued drip and that relative strength line moving in the wrong direction.
Something on that chart is really bothering me. What is it?
I don't know. So many down days in a row?
No,
No? What is it?
lower low.
Oh, yep,
So
yep.
yeah. So we went underneath that last mark low. So reminder to everyone that, we define, not we, technicians define an uptrend generally as higher highs and higher lows. We like to mark them with these little prices on there. That is a genius way of doing it. I didn't come up with it. It was Bill's been using it for probably before I was born, of 9 days on one side and 9 days on the other, or more, where you have a peak or a trough, and then we just mark that. And it's a just really simple way. You want those numbers to continue to be higher on both sides of the ones underneath, which are your lows, ones up top. So this is an area where I would avoid at this point.
XLP consumer staples.
Yeah, just kind of a weak RS line, and you don't want to be in this space if we're in the bull that I think we're in.
Yeah. Yeah, if we're in a risk on market, staples is not the area. Retail, XRT.
Man, this one messed me up this week. We tried it on Swing Trader. I was trying it personally as well, and it just didn't work out. It hasn't, we backed away from it just because things that haven't been working have been doing that slow drip and then it falls apart. So we were, kind of proactive in taking it off right away. But if it moves back up, because there are a lot of retailers that look very good. I know you're trading Costco that had
Mhm.
nice earnings. Walmart looks good. A lot of the smaller ones, like the Burlingtons of the world, look interesting. I think TJX was looking good too, from
Mhm.
memory.
Ollie's broke out this
Oh,
week.
always, yeah. I was trading that one, after the earnings came out, and I don't think that the report from what I saw was that good. I think there was a change in the CEO, if I'm remembering. I'm getting old, so I forget things all the time. What's your name again?
It's okay,
Um,
there's a lot to remember.
but this is acting really nice.
Mhm.
Post gap up, holding in tight. So it might give us a chance next week. If we can hold in tight here and take out the highs from yesterday, that could be an entry point. Or if we hold in tight, shake out, but not all the
Mhm.
way down to the gap up low, and
Right.
then go back up, give you an upside reversal entry point. That would be really nice as well. So I think this looks good. It's one of our friend David Ryan's favorite stocks, and he knows how to pick retailers. So gotta have a
We'll watch it.
positive bias there.
Yeah, we'll watch it. Okay, so select leadership to continue to watch in retail, financials. This is another area with momentum right after the election. It's given back a good amount of that. What do you say, Webby?
Yeah, I was looking at Goldman Sachs, which is kind of my go-to in this space, and it's hanging in there. It's just, it's not really a shelf anymore. It's just, almost flat base, like a flat base with some tolerance in there. Um, And so, yeah, this is a space I'd still be looking at because it's just kind of pausing, but not in a weak way with like some of the other ones.
Hanging in there. Okay, let's go to healthcare. This has been bad and it continues to be bad, underperforming.
Yeah,
What
the
do you say?
sad news with pull up UNH,
Yeah.
just terrible, 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 terrible news. And my heart goes out to the gentleman's family, who, the CEO, if you didn't pick up on the news, was assassinated
Mhm.
essentially this week.
Of the insurance unit
Of the
of
insurance unit.
yeah.
Sorry,
No, it's
but
okay.
still, it's a drag on UNH, and the UNH is the biggest, I believe, the biggest part of the XLV. So you get that selling with this, it hurts that general space. So you're fighting a battle trading anything in this space until I would wait until UNH bottoms and
Mhm.
then start looking um, at
Yeah.
that space because you might get a snapback in some of the ones that have been sitting out. Like the ISRG looks, interesting to me.
Yeah.
Um, so that's not doing anything wrong. It's just not ready yet.
Okay. So that's a look at XLV. Next on the list, utilities, XLU.
Yeah, I still think that this one is going to work again, but it's really the AI related utilities are kind of pausing right now, and I think they need a little more time.
Yeah, I mean, there so many of those AI utility plays had huge runs earlier this year, so maybe just a little bit more digestion and setup needed there. We'll have to see.
Yep.
Here's XLY. Tesla is in this. You and I both own Tesla, but wow, look at that outperformance here for XLY.
Yeah. So, and Amazon is the other big one, and
Yeah,
they're bigger
which has
than
been good too.
Tesla, and that looks good. So, let your winners run. I was seeing it up there so much, and I thought Tesla might have to pause a little bit. So I peeled a little bit of this back on Swing Trader, but just looking to increase it back again. If it can go sideways or if it can pull in a bit and have an upside reversal, we'll add
Mhm.
exposure back because it's doing nothing wrong. But sometimes you just want to lock a little in.
Right, and you're talking about XLY.
XLY.
Yeah,
Yeah, no, no. I'm at kind of a max position on my Tesla. So
yeah, yeah. Okay, here's a look at XLK Technology.
some would say over max. But XLK, yeah, that looks interesting. There, and you've got the Microsofts of the world that look
Mhm,
good. Apple, like the large cap techs look interesting.
mhm. Yeah, most
And
of them.
yeah, for the
Mhm.
most part.
Yeah. Okay, so that was a look at XLK. Let's go to ARKK. This also shows a little bit of that volatility from Monday, Tuesday this week.
Yeah, so I was adding to my position in this near the close. I think it's a good way to trade the heat if you don't want to be super active and screening all day long and hurting your eyes and
And
everything.
having to
Just
be fast, right?
having to be very fast. Yeah.
Yeah.
So I know Kathy Woods is very people love her or hate her. I just look at I would go to her website and look at the holdings. She's got several. I'm in pretty much all of her funds in various sizes because they all overlap a lot. Like she's got Tesla and pretty much everything, but then she's got different stuff in each one of them. Um, and a lot of it's junk, frankly, that I wouldn't want to trade individually, but as part of a portfolio within an ETF, an actively managed one. I think it makes sense for right now while it's trending. This
Yeah.
is not a space that you want to be in when it goes underneath the 21 day.
Yeah.
Let's just go out to the monthly on the ARC.
Right.
This is not one to just buy and hold and
Mhm.
forget about. It's a trading vehicle
Yeah.
for heat.
Yeah. The speculative junk, that's what's working right now for the most
Yep.
part. Yep. Okay. We've already talked about the cues. Let's talk
Yep.
about the chips because an interesting development this week. Every time it comes down to the 200-day line, I think, all right, chips are really on the ropes here, and a lot of them are. I mean, there's
Yeah.
winners and losers here. You can't treat all chip stocks the same. But a bounce today for SMH up 2.5%.
Yeah, so with this one, it is really the winners and losers right now. And then you've got like the losers are like the AMDs of the world, but you've got winners, losers, and the ones that are just base building. So I'd say the Nvidias of the world, Nvidia and TSM, which are a big part of that, are just base building. Like TSM looks pretty good. Nvidia, who knows how long that needs to, you know, put in some time there. I think a test of the 200 day, which is that black line, would be normal and natural. Doesn't mean that it's going to go there. Doesn't mean it's going to stop there if it goes there. But then on the flip side, you've got the other ones, so like a MRVL, which is in a completely different position. Gapped up on earnings, came in nicely. A Lab, which I do have a position in that one, and that's acting completely the opposite of what you know like an Nvidia is doing
Mhm.
right now. And then I think later on we're going to talk about another one of those in
We
that space.
are. We are. And actually, let's go there next because that was the end of our ETF list.
Okay,
So I think that
perfect.
that's the perfect segue to talk about Broadcom ticker AVGO up 24.4% today. RS line blue dot, no surprise as it breaks out of this double bottom base, which you flagged as it was getting back above the 50-day line. And a great report here, great reaction to the report as we see another quarter of acceleration of growth on both the top and bottom lines here.
Yeah, so I think this looks. Let's go. I have a position in it. Yeah, so the weekly. You read my mind. So let's go down to the quarterly numbers. and this is something we talked about on the show this morning. The acceleration, both earnings and sales, was a huge deal to Bill O'Neill, the founder of IBD. Back when I was in the research department from '97 to the end of '99, one of our job functions was to do the earnings reports as soon as they came out off the press releases, actually off of physical wire. We'd have wire monitors rip off the sheet, bring it to us. We'd have to back out we'd have to, do all the work to get those numbers in there. And if it had triple acceleration like that, like triple meaning three quarters in a row, both on sales and earnings, we had to fax that to Bill at his house because he wanted to know that ASAP because he had a theory that there's a long story behind that we'll talk about on live next week. But basically, that even if a stock was at nosebleed territory, if you had acceleration in both of those, you just go and buy it no matter what. You buy it up there, and on balance, that is going to work for you. That was his method. So it was a big deal if we called it a hot stock, and we would have to fax it over to him. So when that came out yesterday, let's go back to the daily. I was so frustrated. I was traveling yesterday during
Mm.
market hours, and I had a position in it, and I had a kind of a tight stop, too tight of a stop, and I got stopped out near the end of the day and didn't realize it until right after earnings came out. After the close, I'm like, oh, okay, I'm going to add to it, but I didn't have my position anymore because I had been stopped, so I immediately started buying it like in the mid 180s and just kept. It had a temporary
Mhm.
thing where it pulled back in a little bit and just kept adding to it and made it probably too big of a position. But when you have that setup like that, and something, I've been watching that type of action on triple acceleration um, for God since
Yeah.
'97. So I felt comfortable with just putting a bunch of chips there in a chip name because this should have done exactly what it did today. Like, I was
Yeah.
surprised when it was still in the 180, 190 range that it was still there, and I just kept buying it. And then, in this now it's going to be tricky because if you're on the other side of this trade and you're shorting it, right? That now you're going to try to make this look as ugly next week as possible. So you're the bears here are going to try to, let's put it underneath the or go back to the intraday. Uh,
Yeah.
they're going to try to make this go underneath 210 minimum. If I were a bear, I'd try to push this, use as much ammo as possible to try to get it down to 200 to try to break the chart, make it look as bad as possible. So if you're in it, don't be surprised if that happens. Um, doesn't have to happen, but just I always kind of think of like worst case scenario. So if they break that and it gets underneath 200 and can't rally, then there's a problem and might be a problem with the
Mhm.
entire space and all the chip space if they can pull that off. If it comes down there and it bounces right back, then I'll be adding to it. Um,
Yeah.
but if it goes sideways, let's say you don't have a position in it and it goes sideways for a week and kind of does what let's pull up CRDO.
I was about to
Oh,
pivot to I was exactly thinking the same thing. Yep.
you read my mind. Or no, you're just
Great minds think alike.
so I do have a position in this. We put this on Swing Trader. So this is what you're looking for,
Right.
where you go up, you shake out underneath there, and then you're buying it there. And I think I was buying it on that day, and then I had to sell it before we added it to Swing Trader today, and then bought it back after our 30-minute window. But this is kind of an ideal type of setup. I wish it would have been tighter in there, but how much was it up on that earnings day? It was up a ton.
40 something percent, I think. Yeah,
Yeah.
48%.
So that's a massive
Yeah.
game changer, right? Like there's some big funds in there that are just saying, I want more of this. Let's go to the weekly and look at the quarterly numbers there.
Sure. Let me
Um,
just do that and go here. Triple digit growth, third quarter on the bottom line. Of course, those that's that special calculation that we do from negative to positive. But for sure was the first quarter of for real triple digit from a small number. And then 3 quarters of some huge double digit top line growth.
yeah, so it's not perfect acceleration that we saw with
Yeah.
the other one, but it's still in general, you see that ramping up. So they tend to not have a 40-50% move up in one day and be over. That tends to be the beginning of a bigger move higher. Let's go to BlackBerry real quick. 2004. I think it was 2004.
Uh,
And
here,
this was RIM at the time. Go out to the weekly so we can get the
here.
yeah, that move. So,
Okay.
and we don't have to do any more than on this. Go back and those of you who use market search, oh, you're going to go to it. Perfect. Um, so that was this massive move. And I remember it like it was yesterday, and I was too scared to buy it that day. In fact, I was too scared to even call Bill to tell him about it, to put it on our list, because we managed a institutional list, kind of like leaderboard swing trader together. And now this was the perfect day.
Hmm.
That's what you want. So I would go back and study this one, because you're not going to be on those news item days unless you just get lucky, or earnings or whatever. And to be honest, like my position yesterday that I got stopped out of was small, because we were going into earnings and I didn't have that much of a cushion, so I couldn't have big size there. But even with this one, this is where you want to be buying it, and just go out like 2 or 3 months and see what that did. Yeah,
Monster.
monster, right? Um,
Hmm.
and that's your first test of your 10 week, and then it had a big move. So and this is also, let's go out to the monthly chart on this one, to the current day, as just a reminder to never fall in love with a stock, because that was the stock back then. I mean, it
Hmm.
was like what we everyone talks about Nvidia now, where they talk
Right.
about
It,
whatever.
it could
That
lose its
was it.
crown. BlackBerry lost its crown to Apple.
Yep, it sure did. So when you misstep, that's the unfortunate thing that happens. So just
Yeah.
don't get married to a stock
Yes.
without a prenup.
Yeah, there you go. But yeah, on the day that CRDO had that huge gap up, I was talking about the similarities with App. Full disclosure, I do own this, which was even stronger, but was running before its earnings gap up. It was up 46% that day. This turned out a little bit differently. So they can act a little different. They're not all going to
Mhm.
act the same. They're not all going to work. But I think that basically, Webby, what you're saying is the more of these that you study, this is the kind of thing to look for. Look for those shorter digestions, those little reversals. If it's checking all the boxes fundamentally and is showing this kind of power in this type of market.
Exactly. And pay attention to how they handle themselves around the green line, the 21-day exponential. And this was nice. Found support there, nice upside reversal. I bought some there, but I backed out of it just because I was taking on so much risk with the
Yeah.
oversized positions in the other heat that I was in, and but looking to get back into it. So
Hmm.
but yeah, APP looks great, and excellent job getting into that one.
Well, we'll see how it turns out. Okay, so that was look at CRDO. Now let's shift gears to another stock that had a big move this week, and that is Google parent Alphabet breaking out of a cup with handle base on Tuesday this week. And a big momentum shift here, I think, for the stock. And this really made it clear that many of the mega caps were getting that money flow, right? The money was rotating into these mega caps because look at what it did to follow up on that breakout day, right? Huge second day up.
Yeah, and so I do have a position in this, and we put it on Swing Trader on that gap up. It was surprising to me because this one had been lagging.
Hmm.
In the base, we talked about it on IBD Live. We went through the week by week, and it's not a perfect base, but when you get news out there as kind of a game shifter, and you get that type of a breakout, that stock wants to move higher. And I think that what's happening is, rather than the market selling off, the mega cap selling off, they're just going from one to another. So they're taking the money out of Nvidia temporarily, putting it into Apple and Google, and into Tesla and Amazon, and then and to a certain extent into Meta, but letting other ones, just kind of
Mhm.
base build, and then it'll reverse again, And so with the Google, that's not really, doesn't feel like a game changer at this point, but this feels like something that wants to, go on a 20% plus run. We'll see how
Yeah.
the news plays out. It could be, a big deal, and it could turn into an NVIDIA type of run. You always want to keep an open mind. But right now, you're looking at it saying, okay, what's normal and natural? And how I would look at this is say, okay, from your breakout to your peak 3 days ago, you want to stay um, above the 50% retracement of that. And so, yeah, where you marked it is about right. And so it can trade underneath there on Monday, but you don't want it to really close underneath that. You want it to shake out below that and close up. So if it has a shakeout like that next week, I'll be adding to my position, because that would be normal and natural. Now, if we give it all back and close underneath that big blue day that we had 2 days ago, that then you just back away from it and you say, okay, base breakout failure. They happen all the time. Over half of base breakouts fail. That's a reality. Yeah, it's about 55 or so percent on average. And so that's a lot of bases fail, and you just have to be prepared for that. But right now, the the fact that it's down 2 days, that's normal and natural. Looks good to me.
Yeah. All right, Webby, are we ready to go to your charts?
Yes, let's do this. Let's
Let's do
see.
it.
All right, give me a second because this old man takes his time with.
You're good.
Okay, let's see. Can you see
Okay.
my Bob Weir? Take a step back
I sure
weekly.
can.
Okay. So we always
Oh,
like to
wait, that's
start
actually
this.
the daily. This says
Oh,
daily.
let me go over to. Thank you. Gotta go over. It's a little different on my laptop. Okay. Weekly. Now
There we
you can
go.
see it, right? Okay.
Yeah.
So with this one, you're always just looking for signs of abnormal action. We have kind of a small pink candle, a little bit smaller than last week's. That's normal and natural. They can't always go up, so nothing to worry about there. Just kind of pausing. And on Nasdaq, with this one, even though it was a blue candle, meaning it closed higher than where it opened, just being honest, it kind of looks like a stalling candle, meaning it's probably hard to see, but your wick, which is the distance from, on the top of the candle
Mhm.
and on the bottom of the candle, you can see that on both sides. And you have this little tiny body, is what we call the candle portion or the blue portion. And that's kind of stalling. So it wouldn't be surprising to see this come in just based off of that
Yeah.
alone. Doesn't mean it's going to happen. And when you see something like that, you just kind of go over to something similar. And then here's the cues on the weekly. Now that doesn't look like it wants to go lower because it a little bit bigger of a candle, and your wick on your bottom was bigger than your wick on your top. So it didn't give you that stalling feeling. So
Mm.
this is kind of telling us what we've been talking about is the
Yeah.
mega cap tech is working in your average stock, which you see in your NASDAQ that you don't see in your Qs as much. That one is a little bit weaker. So that's normal. Now let's go over the regressions because there's a lot to talk about here.
Oh,
Let's
yeah.
start. Excuse me. Let me start with the composite. And so again, you can always go back to the prior SMTs for more on this. Our dates remain the same. August 5th, as well as I think it was October 14th. Yeah, right
50
there.
trading days
50
out.
trading days.
Mhm.
I'm trying not to cough. So you talk for a second.
Okay, you're good. So then we have the standard deviations above and below. On the bottom, the green hash line. That's where we like to press the gas. And then so we can still hear you, but
Oh, I was trying.
you aren't muted.
I thought it was.
I only said it because I knew you thought
Oh
you were
God,
muted.
I thought it was muted
Okay,
with my
it's okay.
little hand.
You
Okay,
clear.
so
You
I'll
clear.
talk now. So I
Oh,
cleared
you're
my
good
throat.
now? Okay, okay.
Okay. Well,
Back to you.
I can't find the mute on our software. That's
Okay.
why I had to do that.
Tell me if you need me to. It's down at the bottom, but yeah.
Okay, something's over top of it. So with this one, we're up at the zero point 0.5 standard deviation. So it can ride along this for a while and still be fine. Like it was doing it over here for about a week before it came back down. So this can ride along this point 0.5 and then make a run for the one standard deviation. If it's super strong, it'll actually break out above the one standard deviation and go on a faster kind of climactic type of run. We don't want that. We'll take it if we get it, but that actually makes things more difficult. So just riding along here, it can do that and still trend higher. Let's look at the cues to get a signal there. Now this has been riding along your white line, which is your regression line, and it looks like it wants to run to the zero point 0.5 standard deviation. So you're still gunning it here. Now, if we come in, then we're going to think that it's a magnet to the 0.75, which is your green dash line, which let's toggle over to SPY to see that one there. This one, much weaker position. It could never snap back all the way up to what I call home base of where it wants to trend to when it's healthy is your white line, your line of best fit. That's your regression line. The fact that it's been weak and hasn't even been able to get up to that is a reason to kind of stay away from SPY right now with any heavy weightings. But we're testing the point or the one standard deviation, which is your solid line here. So the thought process is if we can make it back above the 0.75, the dash line, that's when you want to gun it with the thought process that is going to run up to your white line. It tried it here on the 11th, a couple days ago, where it was going to do that and immediately backed away. So you need to be nimble
Hmm.
and change your expectations. But to kind of sum this up, if we take out the highs of today and yesterday, that would put us, back above this green dash line. And if you have a nice close, meaning it's a blue bar and it's closing near the highs, it's not like a stalling type of candle like we had over here on the 6th. That was a stalling candle. If you have a kind of candle like this on the 4th, your
Hmm.
expectation was to move up to the white line, but it just for some reason it's just not wanting to do that. I don't know if it just needs to pause longer, or there's concerns
Nasdaq
about
taking the lead.
the Fed or whatever. Yeah, it
Yeah.
is just doing what it's doing. And what was the other one that we wanted to talk about with the regressions?
We wanted to go to RSP and MDY.
Okay, let's do the RSP first, since we were just looking at the SPY. And this is what you don't want to see.
Hmm.
Just as a reminder, so we saw the SPYs kind of on the ropes. This one was on the ropes over here at the end of October. And if you're underneath your green line for, where your high is underneath that for, 3, 4 days, you pretty much have to say that that trend has changed and is broken. So the trend that we had from, the beginning of August to over here, the end of October, that changed there and it could never get going and it should have. So it's in a weak position. So that's what you don't want to see. And then we will look at the MDY and kind of a little bit different here. This one got so strong that it got on the outside of the plus one standard deviation. So your solid red line at that point, it really should have held in there for a day or two and then run much higher. But the fact that it came in was, telling you
Yeah.
that, okay, we've got some trouble here. Now, then it was a magnet for your white line. That happened. That
Couldn't
was your
hold
home
it.
base. It's even weaker now.
Yeah. All right. And then I'm really excited to see some of these retracements with that
Sure.
in mind.
Okay. So SPY, I still have the old retracements on there. Just using the low from November 4th up to the high there a few days after that, and just wanting to see it
Hmm.
stay above that level there. And let's look at the composite. And this is what you're wanting to see. Those are essentially the same high and low there, and we've been able to stay above our old highs in a material way. So that's good versus something like an MDY that fell right back through it, or an RSP So those are where you want to stay away from. Let's quickly just go to the levels because there's not a whole lot to say
Yeah.
on those. SPY, the green one is always our recent highs. Your first yellow line, that's your first line to be concerned with. And it's so close, so you don't want to be too concerned with it. But those are your highs from the 11th of
Mhm.
November. We'd like to stay above that. But really, if you were to break that, then there's a few other places that you can look at as
Yep.
some support. November 15th low,
Yeah.
obviously your 50-day. And then we'll just look at the composite real quick. Um, and the same basic thing here. This is so much stronger. I would say that the concerning level is the high from the 11th because that coincides with your 21-day. If you break through that, then you're kind of in trouble.
Hmm.
And then I'm going to go over and we'll just wrap this up with what we always do. Get rid of the mumbo jumbo. Just look at something very simple. Our 21-day exponential in blue there is your low above it. You're in generally in a good space. And then we'll look at the composite. Oops. Composite looks really nice. Same thing with the Qs, but you compare that to an IWM. Now your high is underneath your 21-day. That's a very bad sign.
Thumbs down.
MDY, your high is almost underneath there, and RSP, your high has been underneath there for 2 days. So you don't want to see that happen.
Yeah. Thumbs down on that too. Well, we
Yeah. So
love the 21 day. Okay, now we have a couple more that we're going to show, starting with the Webby RSI.
okay, and I will be fast because I know we've been talking a long time.
You're good.
And so SPY, this is our WebRSI, which is down at the bottom. Those are your histograms, and that just measures that distance we were just looking at, your low versus your 21-day, and it's expressed in ATRs. So this is still in your sweet spot here. It's just around, zero point 0.5 uh, ATRs. So that's fine, and it can trend there. You just want that low to stay above it. You don't want to get too hot, and so this is fine. Nothing wrong there. We'll just
Right?
look at the Qs. Um, and some people are, saying the Qs are too stretched. But when you look at the Webby
Mm.
RSI, that's why, I developed this is to see where is too stretched. So one recent example
Yeah.
was on
June 18th.
June 18th. Thank you. Your eyes are better than mine.
You're good.
So right there, it got a little hot where your Webby RSI was over 3, and then it needed to come in for a few days. Then it went higher, but it didn't, it also didn't get quite to 3, but it was almost there. So now, just looking at this, we've got a long way to go until
Hmm.
we're concerned.
Concerned. Yeah.
Um, we'll go to the Bob Marley real quick. Nothing, out of the ordinary there with the Qs. We're up in
Yeah.
the green
This
territory.
is our off high. So green good. We're at the highs.
Yeah.
Yeah.
So nothing to be concerned about with SPY, but if you look at something like an RSP, this is
Yeah.
where it becomes interesting. So we're now getting into the yellow territory. Yellow is more than 4 ATRs off of our high. But more importantly, I like to look and see where did it get support um, in
Hmm.
prior pullbacks. So we got support, around 3.5 to 4 um, ATRs off our high. Now we're below that. So this is a change in character. And you can see
It
that
is.
with the chart too, right?
Hmm.
All those bad candles in a row, like you don't see that very often. So this is the time for, um, you know, things to kind of change and move up, or your average stock is, going to be running into even more trouble. And that's not what we want to see,
Yeah.
but we'll take it the way we get it.
All right. So, a quick summary here. Lots of twists and turns this week requiring traders to be nimble, but we are still in a bull market and there are those buying opportunities out there. So, traders need to be looking, but also managing risk, right?
It's a long and winding road.
It sure is. It sure is. Well, Webby, we appreciate your thoughts as always. Thanks everyone for tuning in today. Webby, Enjoy your weekend. And I hope everyone out there enjoys their weekend as well. Thanks for spending some time with us today and talking stocks. We have so much fun spending our days with you. We love this, and we love that you all have a passion out there for investing as well. So it's a great community. Thanks for tuning in. We will be back with more Monday mornings, starting with IBD Live, investors.com/IBD Live for all those details. We will see you then. And then we'll also see you Monday after the close. Have a great weekend.